What is up, YouTube? So I was looking at this chart, calling a high time frame potential bottom scenario. And we had this demand zone from where we had the big impulse up. And then formed a range, had somewhat of a little manipulation phase here I was looking at. Brought the move down for a higher low at a higher time frame break structure. And then we have a local 3-tap model. One accumulation. And then now we were retesting the break structure that took us off. We didn't 100% tap the supply. So what my initial thesis was, locally, because we didn't tap the supply, was for this demand zone to hold, because this is the New York low that we set in earlier today. So I was looking at this as demand zone. Let me see if I can replay the trading. Let's see here. Oh yeah, replay trade. So right when we were about right here, I was looking at it. I did enter the trade. And then I was gonna target this high, because this is what I was originally thinking, was for us to come here, take out the high, come into the supply zone, and then reject lower to come into this more refined demand zone right here before potential bounce for a mid time frame higher low on the chart. That's what I was originally thinking of my thesis. And then if we play it, we can see that we rejected from the supply zone that we had formed right here that sent us down into this demand zone to begin with. And so because of this price action and us rejecting from the supply zone and coming down, after that we have a breakish structure right here coming into more refined demand zone on the 5-minute, thus holding this overall demand zone, which can send us higher. And the reason why I have this thesis for not rejecting at this supply zone right here anymore, because we already had this rejection here. And if we were going to reject, we would have had to hold the New York low demand zone right there. And I can pull up the timestamps with the sessions. So the orange candle's New York session, we had the New York demand zone. And because we didn't come up and take the supply before coming lower, I think we have a much higher chance right here to, since we rejected at this local supply right here and came down into this refined demand zone. This was the overall demand zone that I was watching. It was right here. And we did respect it, and then now we're going higher. So it's a retest of this breakish structure. And the demand right now is so strong, we don't even need to deviate it. I know a lot of people would be like, well, we have this refined order block, we're down here. Don't you think we need to come in and retest that before potentially going higher? Like, and form a little low time frame accumulation to send price higher for the high time frame or the mid time frame higher low or whatever. with the breaker structure right there, send price higher. But because of what happened right here, that is the reason why my thesis currently changed due to current price action that we were seeing on the chart. Which is important to realize because just within this short time frame, like not even, it's like maybe like an hour and a half of price action that we're seeing with the candles. The thesis can change quite a lot just because of the way price is reacting. Now, locally right now, what we're seeing, we do have this little supply right here, and we can see we have a wick, and we are rejecting a little bit. Just like we rejected there, lower high potentially. But because we, like I've stated, it can be a lower high and we could reject, and we do have more refined supply or demand down here. We could something like that. I mean, that's still on the table if you want to still look at for potential longs here. But we shall see. Obviously, we don't predict. We react to the market just as any good trader would do. And high time frame pivot point, in order for us to have that demand zone, I think we would have to see rejection, and then we would have to break this low. So as long as this low right here holds, we should see higher prices. Like this is going to take that high out, because there's nothing but straight up liquidity right here. All this is straight liquidity magnet. So once we break this high, likely break that, and continue to spiral to the upside. That's why I did put it in my Telegram group that I did go long with my stop loss here. Entry somewhere around here in locally break structure. And if we zoom out on the higher time frame, then this looks like a retest. And then when the next 6-hour candle opens, we could, if we see bullish expansion, we could definitely make the case that this is a potential high time frame bottom, which would result in the minimum target being hit here would be this liquidity here at 119.2k. That would be the minimum target we would be looking for if we do form a higher low right here on the mid time frame, because there's nothing but a bunch of buy side liquidity here, here, and here, and then we have supply. Whole area is supply really. So if we were going to make that case for what happens in the future, if this does form a higher low, we could see come up and reject, maybe form another higher low before going higher like that, and then retesting the breakout, and then hitting the 1.68 target for minimum target before we see any high time frame distribution. I think, given economic data and what we've seen with the Fed and the overall playbook for the upcoming months in the market. But that right there seems the most likely scenario for me at the moment. Now, if you want to talk bearish, say we do lose this low at 110.8k. What do I see for Bitcoin? if we end up losing that low, then I see all these lows getting tapped. It's nothing but pretty much liquidity right here. So we could see a rotation down. I mean, at least, like, the most bullish case for a bearish case would be if we come down here. Like, this is going to be a straight magnet, 109.3K if we go lower. And then from here, we have a higher low. I mean, we could take this out because that would be the liquidity. It would be a liquidity grab right here if we take this higher low out right here to be looking at the chart. And then this would be your last chance. You would have to hold this small gap of demand zone. And we would have to bounce hard like that pretty much. And then this would form your higher low, and then we would have another higher low and then continue further up on the chart. At least until we hit that liquidity point at 119.2K, like I said. Because otherwise, 100% lose this low right here. We're going to see this low get taken out right here that we formed for the accumulation that has brought us up so far. And then likely we'll see this major liquidity point that we were looking at earlier when we did form a bottom here, which I had called to a T on X. You can follow me on Trade Outcome on X, trade_outcome on X. And so we would take out that 106.7K. And the reason why I say that it's much higher probability of us holding this demand zone here and going higher, because not only economic data regarding the Fed and them cutting interest rates given the status of the economy, but also if you think about it in terms of psychology on price action of what we're seeing, we came all the way down here. If market makers wanted to take out the 106.7K, I think they would have done it right here, because it doesn't make sense for them to hold it when it's just, what is that? If they would have just tanked price another 0.5% on Bitcoin, they could have easily taken it out. And then everyone would have been bullish on the timeline. Everyone would be placing longs, putting their stop loss below this low over here. Everyone would be going long. Everyone. So they don't want everyone to be going long. Only the few make money when it comes to trading, as usual, because most of this price action has to do with psychology. Most of trading has to do with psychology and the mental aspect. It's important to have fundamentals and technical analysis, but when it comes to executing, managing risk, and preserving your capital and growing it, it's huge mental aspect, huge psychology aspect that one must master in order to become profitable within the markets. And so that's what I'm looking at right now, because if we lose this low here at 107.4K on the like mid to high time frame, then 100% we're going to see 106.7K taken out. And then if we take that out, I mean, yes, this is 12-hour demand zone. We could go into the 6-hour demand zone and still hold this low potentially before going higher. Because if not, if we lose this low at 105K, we're definitely going to see this demand zone get mitigated before us going higher. And this would be the final demand zone on the chart for us to overall be bullish. I think macro wise is this 99.5K to 102.5K. Because if we lose this low, then we take this low out at 98K, and then at that point, we're definitely going to see 91.7K get taken out. This liquidity right here is going to get taken out, probably, because if we lose this demand zone here, then that's what's going to happen. And we could sit here all day and be like, if this gets lost, this will happen. This gets lost. That's why it's important to look at macro context, especially with fundamental analysis regarding economic data and the state of policy within the Fed. And all these fibs suggest higher. I don't know. I think this one was taken from that high to low, I believe. One of them was. Let me double check. So this is the high time frame taken. Go on the daily. Okay, so from this, when we actually did have, people were calling for a 2-year bear market. Didn't happen. Bear market lasted 4 months. All right. And it was an obvious manipulation with tariffs. Obvious. So obvious. Ridiculous at this point. But we had a little local accumulation here. And taking out the high. I remember so many people calling for the top. Oh, this is the top. This is the top. We're going to nuke below 70 before 50K. And we're going to go back down to 20K. Unswept lows at 30K. Ridiculous. Ridiculous, bro. Some people these days. But yeah, this is major demand zone here. Just looking at the chart without all this drawing and stuff. What does this look like to average person? We had a daily bullish close on the demand zone order block. We just opened the daily candle up. An hour and a half ago. Or two and a half hours ago. 3 hours, my fault. 3 hours ago, we opened the daily candle. And immediately, we're starting to see a rejection. So what do I see this as? If we hold this low high time frame wise, this is just a back test for market makers to fill their orders here. And then send price higher, taking out this liquidity at 119.2K. At least, at the very least. That is what we're going to be taking out before we see any sort of high time frame rejection. A lot of people want to say we're going to reject here and then just straight nuke and then take out this low at 74K. Very unlikely. Very unlikely, because no one is bullish enough regarding the Fed and their printing of money and risk on assets within core quantitative easing. No one is looking at this from any sort of economic standpoint. Hardly. I mean, there's some people, yes, but not many people are. Like, it is much more It's much more common sense to stay within the trend line until the trend line fails. And if you just look at what we've been doing this entire cycle is respecting the trend line. So until we see a major trend line break, you can't call for a bear market top. And people will be like, oh, that time it'll be too late. Signs will be there. Signs will be there. Just like we had a topping structure here. Why did we top right here? Well, Donald Trump launched his meme coin. And then the whole market straight nuked for 4 months. And then they cut interest rates right here and the market straight pumped. Classic liquidity in and out on the market. Classic. That's pretty much my overall outlook at this point. I think we go higher and hold this low. Otherwise, we'll have to do further updates. We have this potential, taking out the liquidity and going higher from there. If not, we can always give another update depending on how a price action develops within the time. We have our demand zones marked out for POIs. We know we're going higher. This 1.68 on the fib is 100% a magnet on the chart. We're going to hit it before we reject, because when you have a bear market from a huge topping structure to a major bottoming structure, what is it, like 90% of the time, it's going to hit the 1.68, 618 on the fib. And we haven't even hit that mark yet. And people want to sit here and call for a macro top on Bitcoin. It just sounds absurd to me, honestly. But we shall see. We are rejecting the supply zone. So we could see this other demand zone get mitigated on the lower time frame. You check USDT for confluence. So we had a Model 2 distribution here. Came down. Took this liquidity. And then now we're going up. We do have a little bit of supply. And we saw a little rejection here. We have a pretty disgusting wick into that demand zone down below. So low time frame that we're just watching is this needs to be the higher low to send us down. This is what we want to see right here. Take that low out and then have a full sweep of this liquidity and then straight nuke. That's what we want to see on the chart, locally speaking. Otherwise, if we don't have a rejection here pretty much, and we are rejecting a little bit right now, we do want to see a rejection and take out this low. As soon as we take out this low, which I'll set an alert. So the breakage structure, because we have a breakage structure right here. You want to put market structure. Have a top, bottom, and then we have a breakage structure. Come back into supply, and then if we break this structure down below, then that'll confirm the 6 candle rule. Where we have a slight breakage structure here, but until we take out this low and hold this high, it's not confirmed. So yes, we could see higher, and then we'll have to reevaluate. We have more like if you want to look at a refined supplies zone, would be there, this whole area. Worst case, we have to go with this supply, and we see price push back to retest that supply, and then hit that supply, and then come up. Little topping structure, break structure, and then just straight nuke all the way down, much lower on the chart. Regardless, we are getting close to a topping structure on USDT, and then if we take out this high, then obviously we can look for much higher. We had this supply zone. We could look to hit this area before we reject. Otherwise, if not, we could see 4.7% get tapped for potential rejection. We'll just have to see how price action develops within the chart at the given time. I will admit I don't like how we are bouncing this aggressively up at the moment, making this seem not as good, because if you look at even the 10-minute, this is a wick on the break structure, and that's not something that you want to see whenever calling for this going to be the top in the supply zone. So it's looking likely that we will take it out. Whether we reject here and go lower or reject here, we'll have to see. But I do not like what I'm seeing here for a break structure, so that doesn't necessarily look valid. For we always need 6 candle rule to confirm it anyways. Like I said, when you have a break structure, you come back up and retest, and then have a local break structure to confirm the mid-time frame break structure. You call it level 1 break structure, level 2 if you'd like, to the overall market structure break, which would be right there. That's what we want to see get taken out and hold, pretty much. But we shall see. Not here to predict. Obviously, we react to the levels based on price action given to us through technical analysis and fundamentals. Solana had an aggressive move up, rejection at the supply. It's trying to hold this low. That would be nice if we could hold the low. We'll have to see. It's not confirmed until we break this high. So if we could somehow get price to go up, take out that high without having a huge liquidity trail. We would need like some form of structure. Then we could see this being a real breaker structure and price going higher. Otherwise, this is just another manipulation move to the downside where they pump it up and then they slowly leave a liquidity trail of just a bunch of sell orders, leaving tremendous amount of buy side liquidity left to be taken out later. Let me look at the 1 minute time frame on this Bitcoin real quick. And another thing is that you can do to see where price action or where price is going to be headed is looking at the volume profile. And if you take it from the low, now you can see that the point of control is right here, and we wick that, and price is rejecting. It's in the middle of the zone right now, so we'll have to see. Likely it's going to reject and go lower. That's what that looks like to me. So it looks like they did fill short orders here. Average price buy-in here. Stop loss probably here or here. And then they're going to be targeting this low, most likely. Or demand zone. Have this local demand zone right here. We'll see how well that holds up. But looking at this overall, does look like it's a failed schematic. And then we'll probably take out this low. Given the way USDT is pumping, it probably would, look like it's going to take out that high. So we'll wait till New York session for new entries, most likely, especially if this high gets taken out. So that'll be all for the live stream today. If you like, you can go back and rewatch it. I have several charts marked out. But a lot of choppy price action, simply waiting for more price action to develop before we can have any real schematic to go by before placing low time frame longs to carry us onto the high time frame targets. Thank you for tuning in. If you did, appreciate it. Have a good night.